Welcome to the deep dive. Today, we're opening up the sources you've shared to look closely at a specific day in the Indian stock market, June 11th, 2025. And it seems this day stood out. It was marked by a pretty sharp downturn.
That's right. The numbers we're seeing in the material, they paint a clear picture. The benchmark BSE Sensex index, it dropped significantly, plunged by 570 points, according to these sources.
Okay, 570 points.
And the NSE Nifty 50 index wasn't far behind, really. It fell notably, too, down by 160 points.
Wow, okay, those are definitely substantial moves for just one trading session. So our goal here, our mission for this deep dive is to unpack what your sources are telling us was actually behind that drop. What was the main thing they pointed to?
Yeah, what the sources really emphasize is that this wasn't like down to one specific event or news item. Instead, they highlighted a broad-based sell-off right across the market. That seems to be the primary driver for the day's losses.
Okay, broad-based.
Which suggests, a wider shift in how investors were feeling rather than some problem with just one company or a small sector.
Right, a broad sell-off means the pressure was widespread. But where did the sources say it was felt most? Was it concentrated anywhere?
Exactly. And linking that general retreat to specific areas, material you provided points directly at the banking and automobile sectors. They were apparently leading the losses that day.
Banking and auto, okay.
Seems like these major market segments saw particularly strong selling on June 11th. The sources mentioned these sector-specific weaknesses. Maybe they were really exposed then.
And did the sources get more specific? Did they actually name any companies feeling the heat in those sectors?
They did, yeah. To give you some concrete examples of where the impact landed, major stocks mentioned include State Bank of India, Mahindra and Mahindra, and also ICICI Bank.
Big names.
Definitely. These companies saw pretty substantial declines that day, and that, in turn, contributed significantly to pulling the main indices down. Really brings it home, down to the stock level.
Okay, now this is interesting, thinking about the general mood. The sources also mention a key indicator, something about investor anxiety. What was signaling that?
Yes. This point really highlights the sentiment, the feeling driving things that day. The India VIX people often call it the fear index, right?
Right.
Because it measures expected volatility.
Right, the VIX.
Well, it surged. Went up by a notable 4% just on June 11th.
4%? Okay.
Yeah, that kind of jump, it indicates a much higher level of investor worry, apprehension, and an expectation of, choppy markets ahead, at least in the short term.
So let me see if I can piece this together from the sources. You had this market-wide rush to sell. It hit big sectors like banking and auto especially hard, dragging down major company stocks within them.
Right.
And all this happened while the VIX, the fear index, spiked up, signaling anxiety.
That sums it up nicely. And the sources, they seem to frame this particular day's fall as, more than just a random blip. They specifically note it underscored these ongoing challenges that were apparently already present in the Indian equity markets. And it really brought those sector-specific weaknesses we talked about into sharp focus.
I see. So June 11th, 2025, based on this material, sounds like it was a clear symptom almost, a manifestation of underlying pressures the sources suggest were already simmering, made visible through this broad, sharp market drop, especially hitting those key sectors?
Precisely. It served as a sort of tangible example of those broader themes your sources were discussing: market caution, areas of vulnerability, that sort of thing.
Okay. So we've covered the scale of the drop, the broad sell-off, the specific sectors like banking and auto taking the lead, names like SBI and M&M getting hit, and that VIX surge reflecting the anxiety. It seems pretty clear from the material this was a day driven by, apprehension and maybe some pre-existing issues bubbling up. So thinking about this event, and especially with the sources pointing to ongoing challenges and those sector-specific weaknesses, it does leave you with a fascinating question to consider, doesn't it? What further questions might you have about the resilience or maybe the vulnerability of these particular parts of the market going forward, especially given that the sources directly link this specific sharp fall to those underlying conditions? Something to perhaps ponder on.